How's everybody doing? Before the video gets started, I want to give everybody a reminder that the Twitter giveaway is ongoing. It's super easy to enter. The link will be in the top of the description as well. I also did a poll in the Discord to see what you guys were liking the best. If you guys were liking the Google Docs, if you wanted a slide, or if you wanted all the notes on a chart. Clear winner, so you guys know what's coming next. I'm not going to bore you guys to death on the Google Doc though. We're going to be try to be super concise and get right through it, get onto the chart, and leave you guys with a good informational short video. Let's go ahead and get into it. Coming into the notes, I'm coming in with the idea either if you're experienced or if you're new, gonna make these notes easily understandable and quick to get through. For bearish order flow, we characterize it by breaking lows, respecting highs, adhering to bearish PDAs, and disregarding bullish PDAs. For bullish order flow, it's simply the reverse of what we said for bearish, with price breaking highs, respecting lows, adhering to the bullish PDAs, and disrespecting the bearish PDAs. A couple keynotes that may stray away from the normal turtle soup sequence or PDA matrix standpoints are breakaway gaps and or balanced price ranges. Obviously, I know breakaway gaps can form as balanced price ranges, but continuing, these gaps allow price to continue expanding without the need for manipulation above an accumulation range. When the manipulation is expected but price continues moving, anticipate a single large candle retrace before returning to the continuation or reaccumulation phase. If the damage has been done, then we can continue. If then, when, where, and why is very important for breakaway gaps and understanding them. Balanced price ranges. When the market operates within balanced price ranges where inefficiencies like fair value gaps are minimal or absent, it leads to efficient price delivery, especially on a higher time frame. This means price moves smoothly between levels without the need for significant retracement or correction. Oftentimes, we'll see it and it looks like this. A balanced price range can look such as like this, indicated with this weekly line. With this line is a weekly PDA. We one tap it, two tap for our true turtle soup. After our first tap, we accumulate with inside of the range. You see we also manipulate the low, the damage being done inside of this candle. Accumulating, buy side, OT at the range, delivering sell side for our double tap into our weekly PDA. Buy side, external, into internal, right? I obviously can see that we didn't deliver this low, right? But we break with displacement past this low. We reaccumulate, manipulate into our then created 4-hour breaker, then form a rejection block, wick. We fail to close past EQ, reaccumulate, manipulate the high, deliver lower. Once we deliver buy side and then deliver sell side, as seen buy side here, and the sell side past this low, it then balances the price range following order flow and your higher time frame. You can't just look at a sell side into buy side delivery and see it as balanced without your higher time frame if then, when, where, and why narrative. In a situation like here, we accumulate, manipulate, distribute the buy side, deliver OTE, respect our high probability, high resistance low, and deliver higher. Once again, we deliver the buy side into EQ, OTE, and then deliver higher. The damage being done in this low, if then, continuing, breaking highs, and breaking higher. Showing order flow, and after an accumulation range, what is the true manipulation into what should be the distribution. Also, understanding when we need to leave certain PDAs behind. In a case like this, we see we did not displace past this sell side after delivering the buy side with an SMT. to anticipate a breakaway gap. We zoom in a bit, we see we deliver the internal into the order block after a sweep on liquidity, displacement, FEG created. Even here, lower time frame, right? We accumulate, deliver the buy side into sell side for a lower time frame trade here. We then create equal lows, induce liquidity into the market, deliver our internal back into the order block, back to external. We displace through the range low and reaccumulate, deliver the buy side into our breaker / order block. I like to think of this as a breaker in lower time frame, right? You can use the low to the right as well as our FEG because we have reaccumulated. And for our weekly profile and daily profile, we have liquidity pools below into low resistance. Following our bearish order flow signatures after our SMT, breaking lows, forming equal lows, inducing liquidity with low resistance liquidity, and then spooling after a reaccumulation into a buy side into sell side delivery. This is easier to do while the market is open with your higher time frame candle open and closes. The open and closes of the higher time frame candles are crucial in this context as they often mark significant levels that guide price movements and reflect overall sentiment of the market. We also need to recognize engineered liquidity. High resistance liquidity is a low that runs a previous low and rejects a high and is turned into a high resistance low. A high that it runs a previous high and rejects its previous term low is a high resistance high. Low resistance liquidities runs occur when price retraces on a higher time frame while creating failure swings on a lower time frame. Focus on key highs and lows that are protected based on time, which align to specific sessions or events. For entries, we like to follow our turtle soup sequence model to understand where and why price might retrace, helping to pinpoint entry opportunities, such as an accumulation, manipulation, distribution into a higher time frame PDA, while lower time frame fading the higher time frame order flow. Bookmaps are often seen as unreliable for reading order flow. I'm not really going to go much into bookmaps because I hate on them and that shit's just stupid. There's no real reason to use them. You can see the large orders, blah blah blah, this or that. I can see order flow with my eyes and by what the market's doing and following that. If, then, when, where, and why. By focusing on these principles, order flow, liquidity engineering, balanced price range, efficient price delivery, high time frame candle open and closes, protected highs and lows, the turtle soup sequence, and the limitation of bookmaps, you can create a well-rounded, precise trading strategy, and this approach allows you to align yourself better within the market structure and tensions, and leading to a more informed and confident trading decisions. I will also show our PDA matrix and our turtle soup sequence so you can find yourself being able to read order flow and when, where, and why we might be able to reverse. I'll do a top-down analysis in another video, but for each time frame, it's possible to read order flow. You can see we have delivered buy side into sell side into another buy side, sell side delivery. This high, these equal highs should be protected right past this low as well into delivering the order block, into delivering lower. We can obviously see we accumulated, manipulated, distributed, created equal lows, and then retrace back into the range. From delivering with displacement past this low, I can then rely on this being treated as a breaker / order block, and a high probability one at that. I can also see after us accumulating, right, we 1-tap, 2-tap our weekly PDA like we were talking about, and then displace heavily with a big black candle on a low resistance liquidity run. We then engineer liquidity into the market with equal and low resistance lows. We chop up for an accumulation phase, manipulate the sell side into a OTE retracement, mitigating the order block / rejection block, then mitigating the opposing order block / breaker block with our FEG. We can see that we're delivering from a weekly PD array inside of a 4-hour PD array with displacement with the open FEG. We didn't sweep the buy side, but we do have an SMT at the high as well. We see after all of that, we displace lower, delivering the buy side after its accumulation range into sell side, balancing this price range. We then see we fail to even touch EQ of this price range, accumulate, manipulate lower, form an SMT at the low, and then deliver higher and reaccumulate for our accumulation, manipulation, distribution lower time frame inside of our higher time frame range. We see we are inside of bearish order flow, respecting the bullish PD arrays that continue to push us lower. Here, I'm not gonna lie, I thought this was engineered liquidity, and it was technically because we took the buy side and then displaced with the SMT. We knew that this high would get taken, and it was a key high inside of a daily, might have been a weekly FEG as well. Weekly FEG was a bit higher. Daily FEG bit above as well, right? But a high probability order block with a daily FEG above, excuse me. Coming back down to the lower time frame, you can stack all of these on top of each other, following your soup rejection block to your order block, displacing with your FEG, reaccumulating, also OT of the range if we mark the high to the low created and follow the 0.68, right? OT retracement after an accumulation into a 10 a.m. candle, probably a news event, into a London manipulation, into a distribution inside 6 and 10. It's also important to see what pushes us higher, when, where, and why after our accumulation, manipulation into a Wednesday reversal, midweek reversal. Or excuse me, actually, technically that's Thursday. Thursday low of the week reversal into a 4-hour order block, respecting and failing to close through into the order block, flipping the overnight in dog and driving us into the high, inducing more liquidity with equal highs, then running that high after a reaccumulation. We see inside of this reaccumulation, we mitigate the FEG, deliver us higher, but do not balance the price range by delivering buy side with displacement. I hope with this video you can learn and understand how to read order flow on a blank chart like this, with one line indicating your PDA from the left with a higher time frame PDA, or maybe not even needing to see it, understanding we've tapped it once, accumulated, and waiting for your time-based reversal. I hope you guys have a great week and look forward to tomorrow's video, and be sure to look in the comments for the Twitter giveaway as well as the link to the Discord. Hope you guys enjoyed and have a great one.